markets have opened. Kartik, before we talk about the markets this morning, now we are beginning this week after a week of record highs last week. Ladies and gentlemen, bear in mind, last week Sensex scaled a fresh peak of 64,000 and the Nifty hit a fresh peak of 19,000. And all through last week, as Indian markets were hitting those fresh peaks, we're talking about how FPIs, or foreign portfolio investors, international, portfolio companies that invest in the Indian stock markets, they've been extremely bullish on India, and that trend seems to be continuing for the month of June as well when compared to the month of June last year. Kartik, talk to us in terms of both the FPI interest levels in India and about the levels that Indian markets are hitting this morning.
Right. So if we were to look at BSE Sensex right now, it's up about 415 points, so 0.64%. At about 65,133, 138 right now. Look at Nifty. Nifty is also higher by about 300 points from the 19,000 peak it did last week, trading 117 points up at 19,306.
So the momentum continuing.
Momentum continues.
Yes.
No doubt. We are already about an hour, 15 minutes since the markets opened, and the momentum has sustained. Right. Why are FPOs really looking at India? FPOs, of course, are the quickest to exit when they sense any signs of trouble, and they take all market momentum with them as they exit. But this bull run is also, an attraction point for FPIs, simply because look at Indian markets as compared to the global counterparts, and look at India's overall interest rate cycle that has paused for the last 2 months. So there is hope that now, with this pausing, the hawkish pause of the RBI, interest rates are finally stable, inflation is under control. There is going to be consumption, and if there is consumption, there is going to be greater offtake of credit by corporate India, which will be deployed back in growth. And if that growth happens, corporate India's numbers shore up, market performance of those companies obviously gets better. So I think overall, as compared to rest of the world, where when FPIs had exited India and had invested in US Fed, the treasury market in the US, I think at that time, it was fairly obvious that they were looking at stability, they were looking at assured returns, and the risk appetite had gone down. I think with Indian markets reaching record highs, with the pause that RBI has now initiated in rate hike cycles, which has not been the case with US or other emerged markets and the developed markets, I think greater interest back in India to unleash a little more risk, plow money back into the Indian markets and take those returns.
But as from a retail investor's perspective, from an individual investor like me or just anybody else out there, how these markets, some analysts say, are overheated, which means the prices are too high of a stock. They're overheated, as they are called, which means that if somebody were to go out to buy a stock today because, hey, the markets are doing so well, I should buy a stock, I should buy some stocks and keep it. The stocks are overpriced is what they say.
Totally.
And some analysts even go to the extent of saying that all this is fine, but expect a correction in the months ahead.
So I'm not a financial advisor, right? So
neither of us are. We're just listening to people.
Whatever we say is based on what we've read and the experts we have spoken to. In fact, just last week we were speaking to Amit Gupta and a few other experts, and I think the advice coming out is fairly clear that perhaps mutual fund investments done through SIPs rather than lump sum payments would be an advised route right now for investors. With the assumption that markets are overheated, you enter right now with a lump sum, and if there is some sort of a correction in the markets, in the prices of the stocks you've bought directly or through your mutual funds, could go down. It could be a while before they recover. But I think everybody is bullish on India's long-term prospects, and I think the message coming out is that sell India at your own risk. So I don't think there is any advantage right now in profit booking, because nobody knows whether we have already reached the saturation point of overheating,
or there is
still a long way to go. The trend line suggests that markets are going to shine a little more for the next couple of days, but you never know how markets eventually fare.
So talk to your investment advisors before you take a decision. Don't go just by news headlines. But yes, the headlines, the fact of the matter is that those investing in Indian stocks from across the world. They're extremely bullish on India. We're talking about the FPIs, or the foreign portfolio investors. But foreign portfolio investors have this tendency to enter very quickly and exit very quickly, as well as Kartik was talking about. So watch out so you don't make your decisions solely on basis of what FPIs or foreign portfolio investors are doing in the Indian stock market.